Excel sheet is visible. Just pause for a second. It may take few minutes to reload it. But I'm here on the Excel, Vineet. I'm not on the desktop. I hope it is visible to everyone now. Okay. Just go through the question. The trial balance is given. This is a very simple question. Trial balance is totaling 3,16,000, and below the trial balance they have given you closing stock, raw material and a finished goods closing stock, and they have asked you to prepare the manufacturing account, trading account, profit and loss account and balance sheet. Okay. So whenever you are doing a question of final accounts, make it a practice that open all the accounts, all the things all together. This is your manufacturing account. This is trading account and profit and loss account. The upper portion till here it reflects trading, and below this it reflects profit and loss account. Right? And this is the balance sheet. Okay. Let's start with the question. Let's start with the debit side of the trial balance. First item is wages. Wages are paid to the laborers, so they are the part of the manufacturing account. So I will write in the manufacturing account to wages. 20,000. Right? Next item, stock, raw material. And this stock is for the opening balance. Opening balance of the stock of raw material. Now, opening balance of stock of raw material is again the part of the manufacturing account. It should be taken here in the manufacturing account. So, what I can do is, rather than putting so many line items here, because I have to calculate raw material consumed, I will make a working note here for the raw material consumed. Let me take it a bit upward side. Right. Raw material consumed here, I will take opening stock, I will write here 5710. Then purchases, purchase of, they have not given purchase of raw material finished goods, but it is a manufacturing. So I will take it in the purchase of raw material only, 88274. Carriage inward is the transportation charges paid on the purchase of the goods. So it is related to purchase. I will take it to the along with the purchases here only in raw material consumed, because the price of the raw material will increase by the purchase cost. Repairs. Repairs, they have not given anything, whether it is related to the plant and machinery or it is related to the administrative building. You are free to assume whatever you want. Let us assume it is the repairs of plant and machinery. So two repairs in manufacturing account. Salaries, factory. Factory is manufacturing account. Salaries general. Salaries general would be a part of the profit and loss account. Two salaries general in the profit and loss account. Rates and taxes, again the part of the PL. Traveling expenses, again the part of the PL. I think rates and taxes are 2240 and traveling expenses are 3550. Right. Insurance factory. Insurance factory would be a part of the factory expense. It will go to the manufacturing account. Insurance general. General will come to PL. Bad debts. Bad debts, again the part of the PL. Bad debts are those debts basically when you have made the credit sales, then if your debtor doesn't pay, it becomes a bad debt. So it is a loss for you. So it would be debited in the PL. General expenses, again the part of the PL. 2942. Carriage outward. Carriage outward means carriage paid on sales. Carriage paid on sales is a part of the sales promotion expenses. It would be taken in the PL. Various assets. Various assets are the part of the balance sheet. Stock of finished goods. Stock of finished goods will come in the trading account to opening stock of finished goods. Right. So I have finished with the debit side of the trial balance. In the debit side of the trial balance, we have not done much. It is the simple placement of the items. Any doubt relating to the placement of any item? Wages can be of trading too. John, in this question they have asked you to prepare the manufacturing account. Right. Now wages are paid to the laborers. If we are preparing a manufacturing account, means we are manufacturing something. So in that case, the labor would be engaged in the manufacturing setup only. In this case, the wages would be a part of the manufacturing account only. What you are trying to say, wages can be of trading too. Wages can be of trading too in case you have paid some labor charges for loading and unloading of material. In that case only it could be for trading. Purchases I have taken here in raw material consumed. This is one working note which we are making. Rather than putting so many line items in the manufacturing account, I am making a separate working note for it. Is it clear? Shall I move on? Okay, so let's come to the credit side of the trial balance. First item in the credit side of the trial balance, sales. Sales will be a part of the trading account. By sales 174000. PL balance as on 1198 and then capital. Now the PL also belongs to the owner and capital belongs to the owner. So I will club both of them here in the balance sheet. 130 for capital plus 12 for PL balance. These are the only two items which are present in the credit side. Right? The placement is clear. Okay. Now below the trial balance there is one line written which says closing stock raw material. That is during this year for which we are making the trading and profit and loss account. During this year the closing stock of raw material is 5272. Now if something is given outside trial balance is extracted from ledger. If something is given outside trial balance, it means that journal entry has not been passed for it. So you have to pass a proper journal entry and you have to give effect to both the aspects in your final accounts. So the journal entry for closing stock would be closing stock debit to trading account. Closing stock debit to trading account means closing stock debit means it will be taken as the closing stock of fixed asset, closing stock of current asset which would be carried forward. So closing stock of raw material 5272 will come here and the second aspect will go to the credit side of it is the raw material, so it will go to the manufacturing account in deduction. Closing stock of finished goods, the effect would be closing stock debit to trading account. Closing stock debit means here it is coming in the balance sheet, it will be carried forward 34324 and closing stock debit to trading account was the general entry and the next would be buy closing stock in the trading account 34324. Clear? Is it clear with everyone? Okay, let's start the balancing part then. First of all, I will close my working note here. Raw material consumed, I will calculate here. Opening stock opening stock plus purchases minus closing stock plus carriage inward. That gave me the raw material consumed. This raw material consumed I will place here. And this total would be the cost of goods manufactured. This is the cost of goods manufactured. This cost of goods manufactured would be transferred to the trading account from here to here. Now I will calculate the gross profit from the trading account. This is the total for the trading account. Gross profit would be this total minus sum of these two. Right? This gross profit will come from here to here. This is the sum of the gross profit. Here I will calculate the net profit. This would be this minus sum of all this. So net profit is 11,480. This net profit would be added to the capital and here we will total both sides. These are tallying. So our balance sheet is tallied and we have calculated the net profits and ultimately transferred to the partner's capital account. Go through it, take a minute. Any doubts, any queries, please ask me. Is it clear with everyone? All the parts are clear with everyone? Okay. So now we prepare the final accounts for a particular year, generally for the financial year. The things which are present, the items which are present in the trial balance are very simple to enter. We have to place them in the debit side and credit side. But apart from the trial balance, there may be some adjustment entries which needs to be given effect while the preparation of the final accounts. The first adjustment entries which you have already seen is the closing stock. You have seen that closing stock is outside the trial balance, so we have to give the effect to the closing stock. So the entry for the closing stock is closing stock debit to trading account. Closing stock debit to trading account. This closing stock debit is carried to the balance sheet, and this is taken in the credit side of the trading account. Now, as we have seen that we prepare it for, this is the financial year I am taking here. Now, let's say in our business, we have the practice that our electricity bill comes on the 7th of the following month. Electricity bill comes on the 7th of the following month. So the bill for the month of January will come on 7th February. No issue. I will make the payment. I will book my expense. The bill for February will come in March. Like February bill will come on 7th of March. Again, no issue. I will book the bill and I will make the payment. The bill for March will come on 7th April. Right? The bill for March will come on 7th April. Now what to do when the bill for March will come on 7th April? I am preparing the accounts for 1/4/11 to 31st March. I am breaking the period on 31st March, but my bill will come on 7th April. But this is the expense relating to the March. We do the accounting on accrual basis, right? So I have to provide for this expense in this financial year. Now when I pay the electricity bill, I make the entry electricity expense debit, electricity expense debit, cash in bank to cash oblique bank, whatever it is. But now in this case, electricity expense needs to be debited, right? I need to take my 12 months expense, but the credit entry, the credit, here I have not paid the cash, here I will create my liability which is called as outstanding expense to outstanding electricity expense. This electricity expense will go in the PL, it would be added in the expense, and this outstanding expense will go in the balance sheet in the current liabilities. Right? Is it clear? How much would be on the estimated basis? When you are receiving the electricity bill for 11 months and you are doing the business from so many years, it would be on the estimated basis that your bill comes 20,000 or 10,000 or 1,000. So accordingly, on an estimated basis, you will take a provision. Right? Is it clear now? Outstanding expense. Now prepaid expense. Okay, again the financial year remains same. Now there is one insurance policy. The period for the insurance policy would be 1/6/11 to 31/5/12. First June 2011 to 31st May 12. So now again you are breaking your period as on 31st March 12, right? So April and May, 2 months is the period which is not included in this financial year. But when you have incurred on 1st June, you have paid this premium. So your entry for payment would be like this: insurance expense debit, insurance debit to cash or bank, whatever it is. Let's say you paid 12,000, right? You have paid full 12,000, but this full 12,000 is not your expense for this year. Your expense is only related to 1/6/11 to 31st March. April, May, you have paid extra for the next year. This is not related to this year, so this should not be taken in the expense of this year. So you have to pass a reversal entry. Instead of it, you will create an asset for yourself: prepaid expense debit to insurance, and you will create an asset for yourself for 2,000, that is for 2 months. Right? This prepaid expense would be taken in your balance sheet as the current assets, and this expense would now be decreased. 12,000 is debit, 2,000 is credit. So effectively you will take 10,000 only as the expense. Similarly, these are related to the expenses: outstanding expense and prepaid expense. This situation may be present for the income also. Let's say you are doing a commission business. You are doing a consignment business. So you receive the commission on consignment sales. Your commission is due to be paid on 15th of the following month. That is, whatever sales you have made in January, your commission would be paid on 15th of February. Whatever sales you made in February, your commission would be paid on 15th of March. Whatever sales you have made in March, your commission would be paid on 15th of April. Right? Now the sales of March creates a problem because you have made the sales in March. The commission which is due is the income of March, right? And but it would be received in April. But it would be received in April. So as you are preparing the final accounts from 1/4/11 to 31/3/12, you have to provide for this income because this is the income due for this year. So you have to provide for this income. You will provide the income: outstanding income debit or accrued income debit to income account. Commission account or income account, one and the same thing. Right? Outstanding income debit to income account. Outstanding income will go to the current assets in the balance sheet. Income account will go to your profit and loss account, and it would be added to your income. income received in advance now. Some income you have received in advance. That is the income which is not due for this year but you have received in advance. That would be income account debit, income debit to income received in advance. Right? Income debit means the amount of income would be reduced and income received in advance will go to the current liabilities in the balance sheet. Are these four clear with everyone? These are the important ones. Depreciation, I think I have already explained you. Depreciation is the measure of wear and tear in the value of the asset due to use or reflection of time. So the entry for depreciation would be depreciation debit to fixed asset. Depreciation debit to fixed asset. Depreciation amount will go to the profit and loss account as an expense and the value of the fixed asset will be reduced. Bad debts. Bad debts is the amount which is not paid by the debtor. That is irrecoverable debt. So it would be bad debt debit to debtors. Bad debt debit to debtors. Bad debts will be taken to the profit and loss account as the expense and debit to debtors means it will be reduced from the debtors account. Now as we know in the business there could be some bad debts. So we work on conservatism. So we always want to keep a provision for bad debts. As per the business practice, we may keep a provision of 1% or 2% of the debtors as the provision for bad debts. So that provision would be made from the profit and loss account. The entry would be PL debit to provision for bad debts. PL debit to provision for bad debts. PL debit means it will be taken as the expense in the profit and loss account. To provision for bad debts means it will be reduced from the debtors in the balance sheet. Similarly, this is the provision for bad debts. Similarly, we may offer some schemes to our debtors for to attract them for giving them prompt payments to attract them to make the prompt payments, that is we offer cash discount to them. So if we are in the arrangement of giving such schemes and our debtor has opted for such a scheme, we may have to make a provision for discount on debtors also. The provision for discount on debtors, the entry would be same, the PL debit to provision for discount on debtors. But the hierarchy in which it would be maintained would be like debtors. From debtors, you have to first reduce the amount for bad debts minus bad debts minus provision for bad debts That is, on this amount you will create a provision. On this amount you will have to create a provision. If 1%, 2%, some percentage is there, percentage of this amount you have to create a provision. Then minus provision for discount on this amount has to be created. Then this net amount will come in the balance sheet. The percentage of this provision will depend business to business. If the question comes to you, it would be given in the question. It will depend on the type of the business, the trade practices. So this was for debtors, 3 items: bad debts, provision for bad debts, provision for discount on debtors. Then next thing is provision for discount on creditors. Now creditors are the person to whom you have to give the payment. You have to make the payment. So creating a provision for discount on creditors means you are creating an income for yourself. You are creating an income for yourself. So you have to be very cautious while creating a provision for discount on creditors. I would say that this provision for discount on creditors exists theoretically. Practically, it is a rare item to see in the balance sheet of the companies. Right? So the entry would be, I can tell you the entry: provision for discount on creditors debit to PL. Provision for discount on creditors would be reduced from the creditors and it would be taken in the income side of the PL. Interest on capital. Interest on capital means if the business can do the business by the borrowed funds or from the own funds. On the borrowed funds, we pay the interest. So on the own funds, the owner can also ask for interest. So the interest on capital is the amount of interest paid by the business on the funds invested by the owner. Interest on capital is the interest paid by the business. So it would be the expense for the business. Interest on capital debit to capital account. Interest on capital would be taken as the expense and it would be credited to the capital account. Then the last item, interest on drawings. Interest on drawings is the amount which is withdrawn by the owner. So the interest which the owner needs to, if the business, or I should put it like this, if the business can pay the interest on the capital, it can also charge the interest on drawings. Interest on drawings is the interest charged by the business. It would be drawings debit to interest on drawings. Drawings debit to interest on drawings. Drawings debit means it would be added to the drawings and interest on drawings means it would be taken to the income side of the business. So these are the possible list of adjustments which you can face at this level. I have tried to cover the adjustments which you may have, but I would not take guarantee that these are the only adjustments. There could be the various others, and you have to apply the same principles to them. John, what you are saying, the discount will not be considered on net debtors. Net debtors will come after the reduction of the discount only, no? Any doubt relating to these adjustment entries? Yes, it would be certainly after provision for bad debts. If we are doubting provision for bad debts, what means what? Provision for doubtful debts. Why we will give discount to the doubtful ones? We will give discount certainly to our good debtors only. Any doubt relating to these adjustment entries? Otherwise, we will take a short break here. Then we have to do one more question for final accounts. So 1% of this amount, 1% of this. Yes, you have to first reduce bad debts. You will certainly not give discount to your bad debts. They're already bad. How much loss you will incur? Okay, then let's take a short break here. We will resume after break. Let's resume. Shall we start? Let's resume. Time. Short. Okay. If there are any unforeseen circumstances, like worker strike. Beneath, if the strike happens after the balance sheet is prepared, then it means the event happened after the preparation of the balance sheet. But what I have understood, you mean to say that it has happened before the finalization of balance sheet. So in that case, such events should be notified in the director's report. You cannot make a provision for them. And anyways, in case of strike, you cannot make any provision. Yeah, I understood. You mean to say any unforeseen circumstances, negative circumstances which takes place after the balance sheet date. And if it is after the balance sheet date but before the finalization of balance sheet, then it should be notified. How the PL would be how will you calculate the profit loss for strike? See, it will automatically come. Strike will take place, then there will be no production at that time. So it will automatically come there. You will not separately calculate it and book it. There is a mechanism. Yes, if the strike is from 25th March till 15th April, if the strike is there, so there would not be any production during that period. If the production is not there, the stock will itself be less and there may be short sales also. So it will automatically come in the profit and loss account. The sales would be less in trading account, the stock would be less. Got it? See, Vineet, when do we book the sales? You are deviating from the basic concepts, realization concept. You receive the orders, you book the orders. You don't book the sale. You book the sale at the time when the property in the goods passed on to the buyer. You mean to say that Maruti has gone through the strike. So it must have received the booking. Yes, it has received the booking, but those bookings are not sales. Those bookings are advances. So they will be booked as the advances, they will not be booked as sales. Accounting is very systematic.